All right, let's do a market wrap. Let's do a market wrap over here. Interesting day. We had that big ADP number this morning. I talked about that. Remember what I said? I said what looks easy and obvious often doesn't work out that way. So everybody jumped in on that number. You got the zombies. They see something. Oh, that's bullish. It's a big number. If only life were that easy, right? That's why I always tell you, embrace the hard, embrace the difficulty, embrace what is tough. That's how you are going to make yourself a winner, okay? If you do like all the zombie, oh, it's a strong number, let's buy. No, that doesn't work that way. Doesn't work that way. I wish it did. We'd all be gazillionaires. We'd all own the world in a month, but it doesn't work that way. Anyway, we had a reversal, close lower. The main thing here is what I've been talking about. The fiscal flows have slowed down. We have zero. Actually, we don't even have zero year-over-year growth. We have negative year-over-year growth. Not a lot, a little bit. Negative year-over-year growth in federal spending. And of course, we have a deceleration in bank lending. We have a deceleration in consumer credit. All this stuff happened at the same time, right around the end of September. Everything peaked out, and with the new fiscal year, it started off pretty weak, I have to say. I was looking for a stronger year, but so far it has not happened. And the culprit in all this, I told you, were the cuts in Medicare, $17 billion down year over year. Now, we might be getting some relief. I sent out an email to MMT Trader subscribers last night talking about the NDAA, National Defense Authorization Act, just got its funding again from Congress. The House will vote on that on Friday. That is overall a $9 billion increase in spending. Okay, that includes the biggest pay raise for the military in 5 years, and other spending increases for ongoing operations that the Defense Department asked for, and they got about half. They were asking for about an $18 billion increase. They're getting about a 9. Anyway, 9 is about a little bit more than half of the $17 billion we've lost in the Medicare spending. So we could get a bump. But there's the Fed rate hike that's coming on the 14th. All right. By the way, the employment and withholding tax deposit data that I look at every single day, that is also breaking down. It is now down below its 50-day moving average. Okay, so, and again, I'm not saying that this is necessarily a predictor for this Friday's number, but it's starting to show some weakness. And again, I'll just repeat that the overall spending, the fiscal flows, they are down year over year. They've been zero growth, and now they're kind of slowly turning negative year over year. So that's, to me, that's what it's all about. I mean, the money drives everything. When credit growth is decelerating, when federal spending is decelerating, federal spending right there, that flows to income of the non-government. I mean, so, you think of that hose going into the swimming pool, the analogy that I always use, right? And the water flowing out of that hose is slowing down. It may even be flowing out at a rate that is slower than the leakages in the pool. That won't be good. And of course, the backdrop to all this is all these people who were bearish the whole entire year while we were buying and making money. They're all bullish now. They're all jumping in. The zombies are all jumping in. Even the cockroaches are jumping in. So we're going the other way for now. Anyway, I'll keep you updated. That's it. See you guys. Bye-bye.